on my mind a lot. Don't need no time watch. I don't know how I got you in my pocket spot. Yeah, that's babe, need you every day. You like my oxygen. Make it seem like the barging down. Got my heart no barging in. From the bed to the floor to the couch. Might wake the neighbors up. Break you in, then break you out. In the end, we're gonna make.
Hey, Dionna, we are back with a new and improved episode of All Time High. Welcome.
Yes, thank you. Happy to be here as always.
You know, it's been a rough week around the all-time high. We took off, we landed on the Bitcoin ETF, and then there's been a little bit of a hangover the last couple of weeks, or not weeks, but days.
Yeah, I noticed that too, right? Everybody anticipated that as soon as the floodgates opened that the money would come rolling in, but they actually recorded the largest ever withdrawal through the ETF as part of the first transaction. So not exactly what we thought was going to happen, but we will comment that it is on point for what happened with the gold spot ETF as well. We saw that dip right after, and then it shot up for the next few years. So I don't think it was too crazy to think that digital gold was going to follow in the trace of regular gold.
No, it's not crazy to think that at all. And it was interesting. There were a couple of things that happened. There were the grayscale redemptions because the fees were higher. And so everybody was trading that in to get part of, let's say, BlackRock's ETF, which had lower fees, the Bitcoin ETF.
Yep.
So that was a big redemption. And then, I mean, we keep coming back to this, but the FTX deal.
Yes, I was so going to say that. It's always back to FTX.
It's unreal. And you and I are kind of on the same page in terms of they are looking to reincarnate that entity as much as they shouldn't. There is like this, and I don't even mean to be conspiratorial, but come on. Like,
yeah.
The integration with government on this is unbelievable because once this thing goes live, the BTC ETF, spot ETF, everybody's excited about it. And how much, do you even know the numbers? I mean, it was the Bitcoin redemption from FTX as part of their bankruptcy proceedings. Pretty unbelievable. I mean, I want to say in the millions. I don't think it quite reached $1 billion, but we'll have to check our numbers. I may be able to do this in a second. Today, we want to share with some people some interesting stuff beyond the Bitcoin chart, beyond the market cap, which took a little bit of a hit. Because if the idea is to buy low and sell high, not financial advice, we found a little Twitter page, an X page. I guess you can't, do we say Twitter anymore?
It's funny. I just saw Elon Musk talking about, he was doing an interview. He called it Twitter the whole time. So X Twitter maybe is the caption.
X Twitter, the way to go. All right. Well, I'm going to pull up the screen and then we're going to walk through, and I really want to get your commentary, not only from you, but for our listeners as it relates to this new account that I've seen for the first time, but it's a good place to be. I'm going to go all the way back to top of this wonderful thread that Minty, that's right, Minty established. And we're going to walk through. This is my account. If you want to follow me on X or communicate, I can be reached at JimFlint12. It's been around for a while, and I look forward to connecting with you. But let's take a look at this first one. It's talking about crypto bubbles. Have you seen this before? Or take a look at it and let's talk about what you see here.
Yeah, this is talking about trends for the last week. Is that what it's reporting on? Yeah, month, year. I would say this first as a disclaimer. When anybody's ever doing their research, the one thing you always want to avoid is anybody who promises a return, because there is no guarantee. I don't care what, even for bonds. Well, I mean, I guess bonds are supposed to have a guaranteed return, right? But there is nothing that's a guarantee. So when you go into an investment and somebody says, I guarantee you're going to see X return, that's a big red flag. However, be skeptical. Actually, I think you should just run from it. There's no reason somebody should be guaranteeing a return. Yeah. But following trends is 100% an effective way to look at the project's viability.
Yeah, and as I look at this reminds me visually that as we see the green bubbles grow, that there's a time and an opportunity to take profits, because eventually, or at least historically, the bubbles do burst. And if you look at the volatility that's inherent to cryptocurrencies, this kind of gives you a great visual of that. Now, we don't want to spend as much time necessarily on all these, but let's take a look at some of the others, collapse this. a good resource visually. CoinGecko is another great resource. We have a tendency to use CoinMarketCap, but the thing they're mentioning here is categories. So if you're looking to invest in a category, this can take you straight into different groups. Do you want to talk about some of the categories? I mean, you could be investing in some of the video game, the player action, I guess Infinity. Is that one of the ones? Maybe talk a little bit about that. I think you're pretty
for gaming and for I'm gaming the ecosystem for gaming in itself is perfect when it comes to tokenization, right? I mean, you think about from Minecraft to most of the games out there have where you put in money, you top it up. Even PlayStation, right? You put money on the PlayStation, you have these rewards, and then you spend your rewards as you're going through the games, or if you want to buy a game. And so tokenization behind gaming is just kind of a perfect fit. So I would look at, if gaming is the sector that you think is you're the most bullish on, jumping in here, looking at the categories that are associated with gaming, and then actually jumping into each one of the individual projects and researching it. Who are they? Where are they from? What are they doing? What are they trying to do? I will say that, the more established, the bigger game ones are obviously, they have a bigger network. So it's more likely that they are going to see a bigger return on whenever they launch their own ecosystem. That's not to guarantee that it's going to happen. And it's not to say that it couldn't go down as well. But I just think that the symmetry between those things are just kind of the perfect thing to see cryptocurrency continue to go up.
For sure. And if you can find and learn more about the utility or the best in class use case, you now start to understand some of the value props that help build out these ecosystems and attract, right? We're going to talk about attracting users, but we're going to later talk about attracting developers, because those two things are going to have to continue to occur to help this space build to an all-time high.
Yeah,
so let's
absolutely.
Let's get into the next one. Now, do you do journaling?
I do not.
And so our listeners may be surprised to know that I do. So if I listen, because a lot of times we can get talked into making trades based on what somebody says. And if in that experience, I find that listening resulted in a good outcome, I keep the track of this in a spreadsheet, mind you, right? So that's my journaling. And I acknowledge kind of the emotions that I'm feeling, because sometimes you feel really smart and energized when this thing is going up. You're like, yeah, this is the way it's going to be all the time, except it's not.
Yeah.
Right. And it's helped me recognize that I should be buying more on the red days and selling more on the green days, which is actually the exact opposite of what most retail investors do. So journaling.
I thought when you started talking about journaling, I'm picturing you there with Bitcoin's down today. I'm sad. Bitcoin's up today. I'm really happy. I feel like that in crypto, that's probably a very needed journal to happen.
Well, yeah. Do you remember the first time you woke up and it was like a 40% hit? I do.
Yeah.
It was a Saturday morning. I mean, usually like regular stock market, you're like, oh, okay, yeah, Saturday's off, Sunday's off, chill a little bit. Now, crypto's always on. And so I think it was like December 3rd, which is a couple days after my birthday, on a Saturday morning. I'm like, whoa, that didn't feel good. And, I started to take stuff out, which was exactly the wrong time to do it. And I, through this journaling exercise, I realized, okay, that was the day to buy. If you're going to stick around, selling on that day, that would have been a bad decision. So that was kind of my intro to crypto. I had gotten a good payout in 2016, and I was sitting on it when the ICO boom hit in 2017. I had my BitPay card. We can go back to this later, but when I first got into crypto, I tried to live off of it for a year to see the viability. And that's a whole nother episode we could do down the road. But so I was sitting on my crypto, I have my BitPay card, and all of a sudden it's going up. And I'm like, I'm gonna spend some profits. And the more I spent, the more I made. And I was like, I love it. I love this stuff. This stuff is amazing. So it can be very addictive if you come in on the up, and just be prepared. There tends to be a crash, but don't worry, because it tends to come back up again. So you just got to be ready to ride the waves. That's right. And so as you look at this, we've been through enough charts that I think, in fact, this is TradingView, which our listeners have seen a few times now. So we'll move through that to keep us going. The next one they do, or she or he talks about, is looking at the charts for market structure, order blocks, fair value gaps. So when you look at that, they've got this parting of the seas. There are different people out there who can go into greater depth. We may talk about one of them in a second here if we get a little bit more time. Now, let's move on to the 6. I think there's 10 of these that talks about smart money accumulations. I think this is going to be an even bigger deal now. Do you want to kind of jump into this, or I can share a few things here if you'd like?
Yeah, you share first, and then I'm kind of taking everything you're showing.
Yeah, there's some psychological factors. I think we've even seen it the last few days with the spot Bitcoin ETF, where customers or even institutions, to keep things simple in their mind, are going to set options at 40,000 or 45,000 or 50,000. And so when those numbers get hit, it triggers a lot of market action, not only psychologically, but with the machines. And so if you understand that at these certain levels, companies, organizations like Fidelity or BlackRock or whoever it may be are going to start moving things around. Circle is going to be a big one, right? To see how those dollars move can be telling and can help guide you in terms of which coins you want to be involved with. So that's kind of where I was going to go. But what are your thoughts on that?
Yeah, taking it away from crypto a little bit, we go back to the GameStop, right? A couple of years ago. And essentially it's what you're talking about. There was a regular person who happened to notice that one of the VCs had put a hedge against GameStop short, meaning that they predicted GameStop was going to drop significantly in value in the short term. And kind of to stick it to the big man, these guys rallied up on Reddit. They got everybody together and they went all in on GameStop and actually cost that VC, I think $1 billion. It was quite
billions, plural.
Yeah.
Billions.
Yeah, that's what I'm saying. It was a good chunk of money. And so that just shows the power of understanding these charts and understanding what the bets are. I'm not advocating for people to go and do things like that against VCs, because obviously a lot of people make money and a lot of people lose money. If you make the money, I'm sure you're happy about it. But if you want to understand like how you can make those moves, understand those moves, just start getting into reading charts. And it's going to seem a little foreign at first, but if you get up every morning, you do a little education on it, within a couple of months, couple of weeks, depending on how your intelligence level and your ability to understand it, you'll be able to pick up on it and then be able to use those to your advantage as you're navigating through cryptocurrency.
Yeah, that's very well said. And kind of to reiterate, the tweet here from Minty is having a routine is what separates winners and losers. So it's not about trying to time the market, but it's time in the market and continuing that growth and learning curve that you can break down, because it does give you an advantage. And so let's go keep the conversation rolling. This is pre-launch information where the individual is saying, hey, looking at early stage projects that are followed by notable people is helpful. And the one
absolutely.
But
FTX happened too, which had a lot of famous people behind it. So I wouldn't necessarily go all in on the famous people, because there are things, but as you said before, Jim, there's a multitude of things you should look at, right? Which I'm sure you're going to go into right now, that talk about how you could predict a project, or at least have a better understanding how a project's going to perform.
Yes. And as I look at that, I continue to listen to the mainstream media, and we've talked about it before. I'll talk about it again. I think we'll talk about it often. It's clear to me that we've had a Bitcoin Ethereum narrative that is now being extended to Solana. You're starting to see it on Bloomberg and CNBC and Kathy Woods, and all the people that deliver the narratives about the space are starting to mention it way too frequently, way too consistently, to ignore that this is being served up to retail investors. We'll see what happens. And they too are connected with FTX. Why does everything keeps coming back to FTX, doesn't it?
Everything. Yeah, FTX was an anomaly. I'll tell you, it came up as as an exchange, but it seemed like it did everything except exchange. It's like, give me your money, we're going to hold on to it.
Yeah, we'll take care of it for you. We'll take care of it.
Yeah.
So let's go to this one, which is, I have not endeavored to find out more. This will be one that I'll check out. Defil Alama, cool name. And it basically looks for things that are trending.
Okay.
And it looks like their largest TVL changes. So I would think that would be total volume changes based on daily and weekly. Yeah, as people move in and out of different coins, that can be telling.
Yes. Yeah, I in the early days, well, not the early days, a couple of years ago, I would sit up late at night because the Asian markets, they trade at our night, right? In Asia, for
Yeah.
those who don't know, Asia and the US are the two biggest countries that actually use cryptocurrency. And so I would stay up, watch the Asian markets on Uniswap, and I would pay attention to the buy and sell orders. And if I saw a significant amount of buy orders, I mean, it was a little bit of reverse psychology on this one. Uniswap at this point, you could do newly listed tokens as long as you had a token address. You could buy the token even though it wasn't listed on the exchange. And so I would pay attention to the projects. I'd look to see who was buying what, and I would try to jump into a project early. So the difference of getting into a coin at 0.00001 and zero point 0.1 is pretty significant. And so I would find those ones with the 0.00001 new coin just starting out, who's buying a lot of it. I would buy a chunk too, put in a couple $100. And more times than not, I was able to flip that to a couple thousand, took my profits and got out. Now, there were a few times where I got a little greedy and I held on and I lost all the money. But it was only a couple $100. So it wasn't anything that I couldn't afford to lose. And that this is not financial advice. If you're going to play, make sure whatever you put in, you're always prepared to lose because it's never a guarantee.
Yeah, and Dionna and I don't know your risk tolerance. So that's going to be up to you and your financial situation, but certainly something to consider. And you're better off talking to a financial advisor about this stuff. We're just sharing some of the experiences for entertainment purposes only. I will say this, and I wasn't able to keep up exactly with the percentage, but I think that was like a 10,000% return.
Yeah, it was pretty
that's some of
good.
the stuff you can do, right?
Yeah, it's. I mean, and those new coins, you never know because who knows if the utility's there? Who know? Like you just don't necessarily know. This is times when you can't really do a ton of research because it's so new. But again, I found the thing that worked for me. I stuck what worked for me. And then, when Uniswap started going through all their stuff, I kind of backed out of it a little bit and I haven't gotten back in yet. But that happened to be a thing that worked for me. So you just got to find what works for you.
Yeah, and here's one, and I love this because we were talking about it a little bit earlier. This is where I would journal. I would look at and say, okay, because if you look at number 9 on the Minty list, they are saying to keep up with other people who keep up with the space, which is great. But there's so many experts out there, and there's a lot of sudden expertism. And if you think it's bad right now, just wait till we get to 3 trillion. And if you think it's bad at 3 trillion, wait till we get to 10 trillion. I mean,
yep.
And so you have to be careful out there. And I love the title. I haven't even looked at it, but Daily Degen HQ.
That's
right?
great.
There are some degens out here that want to, there's wild speculation. There's the degens, there's leverage. Be careful out there. But this person is saying that is a good follow. I don't know, but I will check it out at some point here after the show and potentially report back. But let's go now to number 10, where it talks about the governance proposals. So Messari, which is Ryan Selkis, is a great source of information. He and his team write quite consistently. Have you read his annual report before, Dionna?
I don't think I have actually.
It's typically 150 to 200 pages. So
that's probably why. I'm not doing all that.
So I in the last couple of years, I would go through it and I would not read, because sometimes you gloss it and you blur and you're like, oh my gosh, you get that glaze look. Yeah. I would stop reading it when I stopped understanding it, which then forced me to do more research. It took a while. It took me a month, right? The first year. Yeah. But that's part of this process of going down the rabbit hole to understand the use case, understand some of the potentials. This, I think, has more detail on governance, which means, and this is one of your famous things, if you don't know who's pushing the project, that's another one of your red flags. You want to talk about that?
Yeah, stay away. I mean, if you can't find the team on the website, now the only exception is Bitcoin, but you can find who the coders are, who the devs are in Bitcoin. I mean, you can even see the trail of who contributed to the Bitcoin coin or code. That Satoshi, the pseudonym, is the person who made it, right? So Bitcoin is kind of in its own asset class when we're talking about these things. But all of the other projects, unless you have another project that spins it up and releases it into the real world without forming a corporation, right? Like there's just too many formalities that have to go around now actually releasing a cryptocurrency to where it's taking more of that establishment look to it. And so a project should have, a CEO, a CTO, Make sure they have lawyers, right? You're working with projects that are dealing with both financial and like cross-border legalities. And so making sure that the team you're looking at is stacked to handle the things that they're saying they're going to do is key in all of your research.
Yeah, and I think that's key to a white paper. Now, this isn't part of what this person is saying, but a white paper is helpful. And Satoshi certainly was the foundational white paper of the entire space. So if you're new, I see your coin doesn't have details about it. Well, you might want to be careful. Just be careful out there.
Just be
I'll
careful.
leave it at that.
Yeah.
And then finally, Minty provides a couple of people or platforms that she or he is collaborating with for use of their products. And depending upon who it is or what the exchange is, again, it's a situation of don't put more in than you can afford to lose. I've seen people wiped out during Galaxy, an exchange. I've seen people wiped out with FTX. And then once you're wiped out, you're waiting for the bankruptcy proceedings to finalize before. And I want to talk about this for a moment. Don't overindulge here, but there's no FDIC insurance on crypto.
Nope.
To my knowledge at this point, right?
Nope. Yes.
So even if you're in Fidelity, right, and investing, do you have FDIC if you're investing directly in buying Bitcoin, or are you kind of on your own?
Yeah, I think you're still on your own. I don't think FDIC, but I know we're not going to get into this too much, but how good is FDIC really? I mean, if every bank were to fail, is the government saying they'd be able to cover up to $250,000 per person? Like, I just think it's unreasonable. And I think the US has already set the precedent that they're going to pick and choose who they save based off of just the banks that failed last year. So I think that FDIC insurance is kind of like a false warm and fuzzy anyways, but it is good to say that there's no guarantee. There's no backup when it comes to crypto. So once you're out, you're out.
Yeah. And I will tell you that, and I'm cognizant of this, there was the bailouts that were done for banks that were too big to fail. And as part of revised legislation, and check this out, there's now bail-ins. So instead of the government necessarily providing the funding to support a failed bank that took on too much risk or didn't have proper capitalization or proper liquidity, now the bail-in says that, okay, you're insured up to 250,000, but let's say at one bank you've got 350,000. Well, a bail-in says, hey, the bank failed. You get your 250,000 back. You're guaranteed that. But that 100,000 off the top, well, we're going to bail that in to the bank to help pay for what it is. So I do know of people out there that recognize that risk associated today with FDIC. Yeah. And you want to make sure you're in multiple banks if you have that. I mean, it's a positive issue to have, but when you look at the way this reads, you're like, wait a second, need to be careful out there. So be smart.
Yeah. And who wants to keep their money in banks right now anyways, when I can put it into a cryptocurrency and earn 10%, 3% staking on my money, and I'm getting nothing having my money sit in a bank. So there's good points on both sides. Just know the risk for whichever side you pick.
Fair enough. And I'm going to share here today one of the most important reports that I use when considering whether to go deeper into a coin, to support a coin, to actively. I like to find the use case. That was the thing about 2001. Everybody knew the internet was going to be this big thing. And I would agree that everybody, at least we do, think that this is going to be a big thing. It's happening. Yes. But if you don't know the use case, you can end up like pets.com, not be able to function properly. So here's how I know not just all those other things, but this is the most important one to me.
Yeah, let's see it. Let's see what's the most important to you, Jim.
Drum roll. I need to cue the. There you go.
I was actually a drummer.
Were you really?
Yeah, I was in the marching band. Shh, don't tell anybody because I feel a little nerdy about it.
Do you have drumsticks? We need to bring out some drumsticks.
All right.
That's pretty cool. So here, if it's showing on your screen properly,
it's
developerreport.com. And as you take a look at it, you can see that I want to know what the monthly active development community looks like, because we need builders out there. To get to an all-time high, somebody's going to have to build this stuff. There are so many idea people. And if you're an idea person, love you, trust you. But I know the ones that are going to make it happen are the builders.
Yeah.
And so if you've been in this space for any amount of time and spent it with developers, which I do when I go to an event like Consensus, I want to go to the developer parties. I want to see what those people are like, what those people are about. I'm kind of like, sometimes you have somebody who wanted to be an architect in another life, and so they sketch out homes and things on paper.
Yep.
I think I wanted to be a developer in another life. Like, I've built websites. I do these things. I've taken coding classes in college. I'm up to speed. I've downloaded different things.
It pays. It's good money.
I just want to be able to know, because here's the thing: if I buy into something, if I invest in something, I want to have an idea that it isn't just something that's being said.
Yeah.
Because a lot of time people, and this again is back to the journal, can be deceptive.
Yep.
And you might want to believe them, but have they provided the background? Are there enough people? Because it's one thing to say, oh, there's 6,889, but check this out. It's down on the first page. So at the end of 23, this has been updated. Yep. You can see that year over year, total developers are down 24%. Total full-time developers are down 19%. Yep. That's worth noting. And as I go further in, you can see this chart visually brings that home quite clearly.
Yeah. Yeah, I was going to say, obviously it's down. The money's down, right? So if the money's down, people don't have the money to hire, and therefore they can't hire. And this goes back to knowing the team, right? Because it is very difficult to navigate how to fund a business based off of solely cryptocurrency. Having worked in 2 companies, watching the trends and how they navigated it, it's not easy. It's not easy. And so if they don't manage their money correctly, if they don't take profits when they need to, if they're relying solely on cryptocurrency coming in, flipping it, going out, then the chances of them surviving are very low. And obviously they're not going to be able to hire developers the way they need to, because the funds aren't there when they need them.
Yeah. And as you look at this, one of the things about Ethereum, or even Bitcoin with miners, there is a financial incentive that attracts these developers to support this particular coin. And they, Ethereum by far, right, nearly 3x, 300% higher than the next highest, which Polkadot, Polygon, I'm not saying, are those layer 1 or layer 2s? Are you familiar with those 2 coins at all?
Yeah. For Polkadot. And, I just for a second though, when we're talking about this chart developers, are we saying miners or are we saying we're talking about developers actually working on the project, right? Because I tend to differentiate that from miners actually processing the transactions.
They are different. And that's a good distinction. Probably could do an entire show on that.
I know.
So Bitcoin is off the table here in terms of that regard, because, again, a different show. Let's talk about developers here. And I really want people to note the full-time developers, total developers, right? Because Ethereum's down year over year, but up over a 2-year period. And as I go further down, if you have a coin that's a little bit more obsolete, you start seeing there could be, I'm not saying there is, not investment advice, but I like the trend line here with Starknet. I don't even know that much about the coin, but I like the developer aspect of this, full-time, mind you. And then going further down, if you see a coin, I know nothing about this protocol. However, I like the trend line. That's interesting. And if you see something that's already a top 10 coin and it really doesn't have, say, maybe the developers, you can take a look at the trend lines and go, okay, this needs to get turned around.
Yeah.
Or
they're busy paying legal fees.
They may be, if you're in a battle with SEC, that's for sure. Or Monero, which is very private and has a lot of principles that are, I think, appropriate for the challenges we may be facing with the CBDC. You kind of want to look at it and go, oh, okay. And as I get further down, those are full-time developers, I believe, and I won't go into today. You can hear it in my voice. But the concept that there's part-time developers, that there's all the different metrics that they do on a quarterly basis that helps you get an idea of where this thing is headed.
Yeah.
And I don't choose each one every time, but I'm looking at least one of them every time to say, I might want to check this out, know a little bit more about it.
Yeah, I will say, I'm gonna bring up 2 points real quick. When I worked with an original project, so it's funny because it started off as an amazing project. It had a lot of vision behind it. It had a lot of really good people behind it. We're now 10 years later in the development of this project, and it has 0 use cases, almost no functionality. It is solely like the function that pays for the core team is from the coin alone. So it's It's a coin where every time transactions happen, a little bit of it goes to the development team. The development team uses that money in order to fund the development of the project. So the coin is down. The team is almost gone. The community is almost gone. They have one part-time developer. I have two part-time developers. And yet every day people are rolling into this thinking, oh my God, this is going to change the world. And, just looking at the history of the project, it is more than likely that will never happen just from its performance. So that's number one. Number two is, even if you're not a developer, thanks to AI, which we could probably cover in our next episode, you could go to any GitHub of a coin, grab that code, drop it in AI, and ask it to find the vulnerabilities.
Or extend upon or build upon what has been established. There's so much open code, open source code that
and that's another reason why we have so many different projects. Is somebody says, oh, this project got it here, I think I can get it to there, and they grab the code and they iterate off of it. So that's all you're seeing. Each project is nothing more than an iteration of the technology trying to make it better and better. Hopefully.
Yeah, and within that, tokenomics matter, right? What are the incentives for the developers? What are the incentives for the users? And
the miners.
And miners, yeah, for sure. Dionna, what a great foundational episode. Thanks for all your insight. We took a step back in our journey towards an all-time high, but hey, stay tuned. It's a volatile market. What goes down will go up, and what goes up will come down. Thanks a lot, and have a great day.
Bye.
You on my mind a lot. Don't need no time, watch. I don't know how I got